The biggest lie of 2025 is that the housing market is crashing. If you hear anyone saying that, they're really only trying to help themselves generate YouTube views. They are not trying to help you build wealth. Because if you listen to the YouTube crash bros out there, you're going to miss out on a ton of upside that exists in the real estate market right now. So today, I'm going to tell you why I feel pretty confident that a housing market crash is not around the corner. And I'm going to give you some real, honest answers to the questions the real estate perma bears are afraid to even bring up. What's up, everyone? It's Dave Meyer here on BiggerPockets YouTube channel, where we teach you how to achieve financial freedom through real estate investing. And today we're talking about the crash bros. If you haven't heard this term, it's the people on social media, particularly here on YouTube, who constantly tell you that it's too late to invest in real estate, that we're at the peak, that the crash is coming next week or next month or next quarter. And if you invest right now, you're a total sucker and you're about to go broke. That's definitely what they'll tell you. And it is certainly a great way to generate views here on YouTube, but it is not very good or prudent investing advice that's actually based on any sort of evidence. The real estate market is not about to crash. And I really actually only need one chart to prove it to you, and it's this one right here. Take a look at it. It's the delinquency rate on US mortgages. Basically, this shows what percentage of people in the United States are behind on their mortgage payments. And if you'll notice here, for the last quarter we have data for, which is Q3 2023, that it is close to the lowest it's been in nearly 20 years. And think about this. The real estate market is a little bit unique. These aren't stocks where people just sell them if they get some economic bad news or they get nervous. They're homes that they actually live in. The only real sustained crash that we've ever had is when people were literally forced to sell their homes. They lost their jobs or they didn't have equity in their homes. They fell behind on their mortgage payments and then they were eventually foreclosed on or sold at a loss. So it stands to reason that the precursor, the lead indicator, the data we would need to see change if there was going to be a crash is this mortgage delinquency rate. We would have to see people starting to miss their mortgage payments, and that is just not happening. And the crash bros do not want you to know about this. They've been saying we're about to run off the cliff for the last 10 years, and they've never been right. They want to yell about all kinds of other metrics, go off bad vibes, or pick one extreme example from one market in the country and extrapolate that out to everything that's going on in the country. But there hasn't actually been a crash. If you look here, I'll just show you right now at the median home price in the United States for the last 50 years, you could see that prices back in the actual crash from 2007 to 2009, they dropped about 20%. Now you look at today, housing prices, according to some measures, have come down. And this is just one measure. This is actually the most conservative measure. If you look at Redfin or Realtor or some of these other metrics, they actually show that housing prices have stayed flat or actually go up. But I want to be fair to the crash bros out there, so I'm actually going to pick the most negative data that I can find, which is this HUD data here. And what you can see that prices have moderated from the peak. But to me, this actually looks much more like what was going on in 2018, where prices went down a little bit, than to 2008. And no one was calling it a housing crash back in 2018, right? That was a normal part of a real estate cycle. And to me, that's what's happening right now. I want to be clear, like real estate prices have been down a little bit or relatively flat, depending on where you were. So I'm not saying that prices are growing like crazy or that they're going to grow like crazy or anything like we've seen over the last couple of years in the next few years. What I'm saying is that this idea that there's this calamity coming or that things are all of a sudden going to get really, really bad is really overblown. There's just not evidence that a crash is about to happen. But let's just shift gears for a second and talk about what would actually have to change in order for prices to crash. So the first thing could be a glut of supply, right? I hear crash bros talking about the quote unquote silver tsunami, where all sorts of baby boomers are going to start selling their homes in droves. That hasn't happened. People have been calling that literally since 2014, and that has not happened. And in fact, the actual evidence, if you look at survey data, Redfin just put out a survey about this, 43% of boomers say that they never intend to sell their home. And so while this could, of course, change in the future, there is no evidence that that is actually happening right now. One of the other ways that you could have supply come online is through construction, right? Building more houses. Well, that has picked up, or it did pick up during the pandemic, but the pendulum is starting to swing back in the other direction. If you look at this chart right here, you can see multifamily supply. This is new units, multifamily units being built. And while we are at near 50-year highs, you know ahead of time, because of the way permits work in multifamily, that we are going to go down to relatively low levels of multifamily construction for the foreseeable future. And so it's not likely that's going to lead to a glut of supply. When you look at single family supply, it is definitely up from where we were from during the crash. That was one of the lowest we've ever seen in US history. And it took quite a while for that to rebound. Back around 2018, 2020, we started to see what would be somewhat normal levels of construction. And it went up from there during the boom years of 2020 to 2022, but it is already starting to come back down. And with interest rates staying a little bit higher than I think any builder wants them to be, I don't see that trend reversing anytime in the next couple of years. What the Crash Bros want to see is people in the US in such severe financial distress that they all get foreclosed on or put up their homes for sale at the same time, creating this supply boom that pushes prices way down. Because that's what happened in 2008, and they are just assuming that that's what's going to happen again. But let me remind you that mortgage delinquencies are not where they were in the lead up to the crash in 2008. And if you look at foreclosure data, you see that it's actually only about 1/10 of what it was during the crash years. And if you're thinking, yeah, I mean, maybe the, delinquency rate just hasn't gone up yet, or the foreclosure rate hasn't gone up yet, but it's going to happen in the next few years. Of course that can happen. My point here is not that the housing market will never crash. My point is that there is no evidence that it is crashing. And as an investor, I like to base my decision making around actual evidence, not fear mongering or thinking about things that could hypothetically happen. I think as an investor, the prudent thing to do is to keep an eye on these things. Keep an eye on mortgage delinquencies rates. Keep an eye on foreclosures. But unless they start going up in any meaningful way, the probability of severe price declines in the housing market is relatively small. So you have the choice. You can listen to Crash Bros and let fear and a lack of evidence guide your investing decisions, or you could do what I recommend, which is the more prudent thing. You still want to be a conservative investor right now because it is an uncertain time in the housing market and in the economy. So do your analysis and plan on relatively low or even flat appreciation. But if you could still find deals that work with flat appreciation, or you're going to focus on a value add strategy, you can absolutely still find profitable deals in the housing market. I know because I've been looking at and offering on deals myself already in 2025, and I am going to continue doing that and continuing to use data and to use actual evidence to guide my investing decisions. So that's my advice. I would love to hear what you think about the Crash Bros. Are they wrong? Are they right? Weigh in the comments below. For BiggerPockets, I'm Dave Meyer. Thanks for watching.